Welcome to TheStreet.com TV. I'm Farnoosh Torabi, proudly taking a closer look into Jim Cramer's new book, Stay Mad for Life. It is Jim's fourth book?
Yeah, well, fifth book, yeah. Actually, fifth book.
Fifth
right.
book?
Yeah.
That is so impressive. Now, Jim, one thing that caught my eye in this book, because you don't talk about it all the time on your show or in your writings, is mutual funds.
No, I've actually literally avoided it studiously. I've always felt that it was, okay, I'll be kind of a Wall Street confidential here, beneath me. I said, look, I'm a stock picker, and the heck with mutual funds. Now, one of the things that my publisher urged me to do was he said, look, that's not good enough. Most of the people don't have time to build that portfolio that you tell them to. And you've been adamant, even at the beginning of Real Money, saying, listen, this book's too hard for you. Mm-hmm. I mean, I started with Real Money, this book's too hard for you. So we developed a methodology that would analyze mutual funds. We had the good fortune of having to had some really bad years during the last 7 years, so we were able to factor in who did well in bad times, which I think is more important than who did well in good times. We also had the good fortune of having a tremendous researcher, Nick Nosara, run these numbers for months and months and months, which is a tremendous amount of work on it. And we've produced some really great funds. And I would suggest that most of the people who buy this book just turn to the last chapter.
How do you know if you're a fund person or a stock person, Jim?
Well, if you can't do the homework, or if you can't read a balance sheet, or if you don't have time to listen to a conference call, then you are by default a mutual fund person. Now, throughout the book, I say, look, a lot of you don't even have time to pick a good mutual fund, so go be in an index fund, and I applaud index funds. Can I just say that this is a book that is, with the exception of the asset allocations, not controversial. I make that point because all my life I've hectored others. And I do make the point at the beginning saying, listen, I didn't like a lot of the personal finance books, but I've always said that you can do it better than a mutual fund. What I'm saying in this book is I wanted to create a realistic perspective. If you read Real Money with a jaundiced eye, you will say, hey, look, Jim's saying that anybody can play in the NBA, but they can't. It's not fair. Only some guys can get in the NBA, a very rare group of people. When I read Real Money back, I say to myself, well, I did create a standard where basically I could say that anybody could play basketball really well. Mm-hmm. This is for a book for people who can't play basketball well.
You know what? I think, Jim, too, this book, you say you wish you'd written it first.
Yes,
but
definitely.
In a lot of ways, your evolution, being in the media, a personality, an educator, your audience has grown with you. And it started with investors and the pros, and now it's everyone.
Well, it's interesting you say that because a lot of what I answer here is from email and phone calls from that are filtered through that you don't hear, which is the tell me mutual fund, tell me mutual fund, tell me 401, tell me IRA. Yeah. Everybody I meet, literally everyone I meet, is asking me about 401k and IRA or saving for kids or retirement. They never ask me about the individual stocks I talk about. So I think it's really important to give those people the book. Now, there's, again, we're a Wall Street Confidential, you could very quickly say, Jim, you're being very cynical. What you're really saying is, listen, I wanted to do a mass book instead of a niche book. But you have to understand the evolution of me, which is that I didn't have to write it. Mm-hmm. I'm not saying it's, that I'm so rich I don't need to write it. I'd like to work. But that it would have been easier for me not to write it. I had to go, the 401k has changed since I first created them. IRA has changed a great deal. There's all new college plans. I had to do a massive amount of work to do this book, as did my nephew Cliff. And it was not, Real Money just came to, Real Money was basically my handbook at my hedge fund. Mad Money was from the mistakes I saw people do with my show. It was a cautionary book. The critical media would do well to read that book because I am far ahead of their criticisms about the show. This was the one for people who, let's say you're 18, let's say you're 50, let's say you're a kid. This is for you, and Real Money wasn't, and Mad Money, Jim Cramer's Mad Money, I'm looking at the audio books there, wasn't for you either.
Well, this is definitely for me.
Yeah, you don't need the darn show to read this.
All right. Thanks so much, Jim Cramer. Congratulations again. The book is called Stay Mad for Life. Get rich, stay rich. Get your kids even richer. That's even more important, I think. That's the future.
We're accepting a bunch of these for
TheStreet.com. Make sure you check all of those out. I'm Farnoosh Torabi. Stay tuned.